Hello and welcome to IIFL Securities YouTube channel. I am Shweta Papriwal, and today in our Leaders Speak series, we have Mr. Amarendra Kumar Gupta, CFO, Asian Grantio India Ltd. Welcome, Mr. Gupta. It's a pleasure to host you today.
Good evening. Welcome to all the viewers also. Thank you for hosting me.
Thank you, sir. So as we know that the company has recently announced its Q1 results, so if you could brief us about the Q1 performance and what is your outlook in terms of domestic demand for FY22?
Okay. AGL is spread around India. Like we are almost 30% in South India, 30% in West India, around 30% in Northern India, and balance we are in Eastern India. So penetration wise, we are very well. When this second wave pandemic happened, that is in Q1 to FY22, till April there was nothing. Till April we did a very good job. From May it started. So 45 days of May and 15 days, 45 to 30 days of May and 15 days of June, 45 days we were affected. Right. However, as I told you about the penetration in the market, so every market was not closed. Some of the retail segments were working. However, pan-India basis, almost 80 to 90% retail segment was closed, but 10% to 15% was working. Then the project segments were completely working. The government segment was completely working.
Correct.
So in Q1 2022, what we did is we did a turnover of around 272 crore on 277 crore on a consolidated basis, and mostly this turnover was from the month of April. Right. Balance was from the government and institutional sector and export sector, not from the retail sector, not very high from the retail sector. So we were down by around 37% from what we did in Q4 2021, up by around 111% from Q1 2020. So 2021 was last COVID quarter. So when we compare it with the peers were down by around 42-43%. Right. We were down by only 37%. So we managed well on the project segment. So that was going. Our factory was running. Some of the factories of the peers in this industry were closed. However, we were working. My factory was working. So unlike last year when the COVID struck first, we had to close the factory because of lockdown and other issue. We Correct. Started it on around 10th of May. We started after the lockdown. The export started in the factory also started on 24th of May. So we lost a considerable amount of time, but that was not the case this year. Although the utilization went down to 70%, but the factories was kept running. So now coming to this particular month of July and August, July we recovered very, very well. July we reached a optimum level of 90% of utilization of factory. August month we are working at 95%. So the turnover recovery, the recovery of factories, the recovery of sales has already happened. And right. Now we understand that we will be completing our second quarter on a very good note. Third and fourth quarter is going to be a blockbuster. Unlike in last year, although the COVID happened, if I compare my numbers with 2021 numbers with 2020, financial year 2019-20 to 2020-21, where we see the first quarter was, although COVID struck, and then we have a growth of almost 32%.
Right.
So this, we understand that we will be making around double-digit growth, maybe 20-21% in this current financial year, and we will continue with that in the next financial year also. And we have taken a very stiff target of completing around 2,000 crores by 22-23. It is very well on target, and we will be completing it. To complete it, what we have done is we are also adding some of our product basket in export market, as well as we are all very bullish in US market. We have placed two of our very good executives in US market for some strategic built up and partnership in US market, so that we can launch new product in US market. As you know, these exhibitions and other things have started. Right. So what we have done is we have booked ourselves for Sarsai exhibition is in Italy, UAE exhibition is there, Russian exhibition is there, some is in Canada, some is in US, one is in UAE also. So 6 exhibitions we have already booked. So this year very bullish, and some new products we are launching in exhibitions. So summary wise, I think 21-22 we have a very good year with a double-digit growth, and hope the pandemic is not going to affect much. Little bit of government is also susceptible about COVID third wave, but we feel, see, our office from last year 10th of May when the lockdown ended, from that day till today, it is not closed.
Okay.
Not for even single day. So thankfully, the way the government of Gujarat has tackled this pandemic, the vaccinations, another thing, and now the pan-India vaccination, another thing, you have also seen that although they were telling that COVID third wave is coming, but it is limited to some places in Maharashtra and some places in Kerala, not everywhere. Businesses are functioning as usual. The worst affected place, Delhi, also is showing good result at this moment. So my centers are open. And we as in AGL, we don't believe that third wave is going to be that great that it will affect us. Fingers crossed, it is not going to affect us. What we understand.
Right. So as you say that you are already running on 95% capacity utilization. Yeah. So do you have any plans for increasing the capacity or any capex or expansion plans in the pipeline?
I'll tell you. In our material subsidiary, Crystal Ceramics, we have invested around 25 crores. We have just opened a new plant, 12,000 square meter GVT plant on 25th of June. That plant has costed us around 25 crores. And we will be having a turnover of around 75 to 80 crores from that line. So that is already completed. Next is some renovations of our plant is there. However, what we understand that in coming years, we can put up some plants in Morbi and some plants in other parts of India also. That working is in the pipeline. At the moment, fingers crossed, we have not taken anything. But yes, some new plants may come up. For capex, in the current scenario, what we are doing is only we are completing the bottlenecks, what we are having in the plant. Some renovations are there, some existing machinery replacements are there, which will add capacity of around 5,000 square meters per day just due to debottlenecking. That is what the capex plan is there.
So any fundraising plans, like what is the debt position of the company and what are your plans for debt reduction?
Okay. At the moment, the company in 31st March 2021 has reported a debt of around 258 crore. And it has gone down from 285 crore to 258 crore. We have repaid some of the debt on a consolidated basis. Currently, we are planning to raise around 225 crores from a rights issue, which is coming up shortly. And from this rights issue, we are going to make our standalone balance sheet a completely debt-free balance sheet. And then we will be investing our other proceeds towards general corporate purpose, working capital requirement and all. Issue letters has not yet been finalized. It is still under consideration. The board will come up with the final letter of offer very shortly. And then the other object of the issue will be open to the public. However, we have finalized that we are going to make this a standalone balance sheet as a debt-free balance sheet. Right. So that is what is in the current scenario. So we will be coming out of that from this. And interest that what we are paying will come into the EBITDA margin, come into the PBT margins.
Correct. So we have also observed that demand in tier 2 and 3 cities and rural areas, along with strong demand from exports, is what drove the business. Do you expect this trend to continue?
See, this is the difference between peers and AGL. We are very strong in tier 2 and tier 3 cities. We are expanding there very much. So when this COVID happened last year, a lot of major cities were closed. However, tier 2, tier 3 cities were a little bit open, little bit relaxed, little bit open. COVID did not struck there, thankfully. In the second wave, the tier 2 and tier 3 cities got affected, not in the first wave. So we recovered very well in tier 2 and tier 3 cities. The demand was very well. We almost made a 32% growth out of those cities only. And then we made a very good growth in export market. We from 140 crore, we went to 195 crore. So now what we are understanding that we are launching new product in export market. It will be a large format GVT tiles, something around 1400, 2800 mm and 3200, 1600 mm, which will be 9.5 mm and 15 mm thickness and around maybe something around 20 mm thickness also. So this product we are going to launch in export market via exhibitions, and then it will be adding to our export portfolio. And after this scenario of COVID, when the second wave is little bit here and there, container problems are there, shipping problems are there. Once Indian government overtakes this problem, which seems to be solving in next another 2 months, Today they have announced the ROD, DEP schemes also. Right. So they are government is also supporting the export market. We are also very bullish on the export market. We understand that export will also show a very double-digit growth. We have taken a very strict target of completing more than 300 crores of export in this year. So that is well on target at this moment. And there was an anti-dumping duty imposed by the GCC countries last year, where out of GCC countries, Saudi Arabia was the first to put the duties. Then now UAE government has also decided to put up the anti-dumping duties. However, AGL last year was on the 46% anti-dumping duty. Today, now AGL, we have done is we have gone for review, and AGL is the first company to get reviewed by anti-dumping duty personnels. So we understand that we will be having a very good scenario on that. Still on anti-dumping duty, we were the preferred partners for GCC countries. After this removal of anti-dumping duty from 46%, it should go down to 10 or 5%, whatever. Right. In the coming, we will be having it in the coming maybe 15% or so, but it will be in the range of 15. So then again, we will be the most preferred partner for GCC countries. So exports are going to grow in GCC countries. We are very bullish on US market. You understand that US has put up a 750% duty on quartz, Chinese quartz, 350% duties on Chinese tiles. So we are very competitive in US, and as a brand, we wanted ourselves to be recognized in the US. That is why we have put 2 executives in US just for the brand recognition, partnerships and all. Still, we were exporting to US market, but now we are very bullish. We want to double our export to US market. Thankfully, European market also, some European market, African market, and South American market is also picked up Indian tiles very well. Right. So there also, we are also very bullish. That is why we understand that we will be able to complete more than 300 crores of target of export market this year. So that is going to add to our portfolio.
Right. So the management has also decided to replace natural gas with propane gas when the price of propane goes below natural gas price. So what kind of impact on the margins are expected?
See, we have historically seen that the propane gas averages around 2 rupees cheaper than the natural gas year-on-year basis. And at some point of time, it is also 6 rupees cheaper. So 2019-20 Morbi, when the Morbi shifted to due to NGT order, they shifted to gas. A lot of them invested in propane gas also, because propane is very good in huge quantities available on the western coast. Right. Means we are importing a lot of propane gases in western coast. So refractory industries are using propane gases very well. Ceramic industry is also using it very well. So we decided on that front that we will be investing in propane gas. We invested around 2 crores to put up propane tanks. Now we are ready. As when we will see, natural gas last year was 30 rupees. From December 2020 onwards, it went up to 34 rupees. Now it is at 41 rupees. Right. So natural gas is getting costly. Now, whenever we get a cheaper propane, we have the technology to shift on to propane immediately. We can use both the gases simultaneously. We can use single burner. We can use double burner, both the burners. The propane has a higher gross calorific value. So we have the technology to shift on propane anytime. Propane is available here. It is within 7 days you can land, the propane can land here at your factory. So now we have the infrastructure. We have decided, we have already invested, we have completed it. We have decided as soon we get a cheaper propane, at the moment it is 1.5 rupees costlier. But usually in a cycle of a year, propane gets cheaper for around 6 months. So we will be using that propane for that period, and we will be saving on natural gas prices. Right. And we understand that due to COVID scenario, as well as government spending on COVID facilities and little bit of the international market pressure, dollar pressure also, the propane is at the moment, this natural gas is getting costlier. Right. But it will be a very short-term phenomenon. We understand the prices should go down after Deepavali this year. It should go down.
Right. So thank you so much, Mr. Gupta, for taking the time out and briefing us about the company and its future growth plans. Thank you, sir.
Thank you, ma'am. Thank you. Thank you very much.